Morning, it's all about the jobs report. We only produced 88,000 jobs last month. They expected 190,000 or so. And if you remember right, the previous report, the previous month was 230-some thousand. So that was very disappointing. The market reacted to it, down 150 points at the opening. And that's to be expected. What was interesting is the unemployment rate also fell by a tick to 7.6% from 7.7, but of course, the way they calculate those numbers are different. Number of jobs being reported and the unemployment rate, but no one believes that it went down. Not even the most optimistic person would believe that it went down. Economic news this week out, ISM for manufacturing, non-manufacturing, still well above 50, which is the break-off point of growth versus shrinkage. So above 50 meaning growth, below meaning shrinkage. But they both weakened a little bit. Remember, we as investors, we want to look for direction, not necessarily the absolute number. The Philadelphia Fed coincident report, something I don't talk about very much, was up 0.3%, indicating a growth for the year of about 2.5%, which is pretty good, probably in line with what most people think. The factory orders report came in right at as expected at 3% this month. Now, the ADP jobs report that was earlier this week said there was 158,000 private sector jobs produced. And no, that's probably good. But the leading economic indicator that we had reported, which is the weekly jobless claims, spiked up 385,000. And we were running around 350 or below for several months, and the 4-week average still fell. But that's 385,000 was a surprise on the upside. And of course, they say that, well, it's because of the Easter holiday weekend, therefore that's why it's weak. Well, it's still 385,000, so that's still not good. I just feel that we have taken precautions, as you know, as all our clients know, anyways, and we've been saying on the radio, this show, that we have been going to cash in almost all of our accounts because we're expecting a correction. I don't know, today, one day doesn't mean a lot, but we're expecting a correction. And I do think the economy is just going to struggle forward. We have a problem with the rest of the world. I mean, look at Europe. They're falling deeper in recession. We don't stand all by ourselves. It's a world economy. So we need other economies to pick up to help us. We can't carry everybody, and that's pretty much what we're doing right now. Asia is okay, but nothing dramatic coming from them either. So I just think it's time to be cautious, that's all.
The Invest Talk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's Invest Talk talking points, plus news of upcoming Invest Talk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.